Good afternoon, everybody, and welcome back to FinTech Festival India's Mumbai Micro Experience. Now, the Digital India program in India was started with its focus on three key vision areas: infrastructure as a utility to every citizen, governance and services on demand, and digital empowerment of citizens. Now, this has the potential to provide an incremental 20 to 30% increase in India's GDP by 2025. Since its launch in July 2015, significant progress has been made in several initiatives under Digital India. Recently, in its budget of 22-23, the Government of India announced that its central bank will issue a digital currency as early as 22-23, financial year 22-23. It is one crucial decision that most major economies are refusing to make in a hurry. Now, the arguments in favor of digital rupee claim that an electronic representation of India's legal tender will boost its digital economy. However, it is also important to evaluate the risk associated with a hasty transition to a central bank digital currency. And in other news, the government also highlighted the plans for a 30% tax on revenue from digital assets in their annual budget speech. What does it all mean for the future of Indian economy, and how does it hold considering the world economies when it comes to digitization of the economy? To discuss this very current topic of the Indian financial landscape today, we are joined by Mr. Sahil Anand, Director, Strategic Projects, Cedar Management Consulting International, who will also be moderating this session. Sahil is also joined by Mr. Saugata Bhattacharya, Executive Vice President and Chief Economist with Axis Bank, and Sarmad Nazki, who is the Chief Financial Officer for CoinSwitch. So with this, panel is all yours, Sahil. Please go ahead.
Okay, thank you, Amit. Good afternoon, everybody, and welcome to this exciting session with two exciting panelists. As Amit mentioned, today we're going to discuss two or three themes around the finance minister's recent announcement on the building out of a centrally controlled digital currency sometime in the next 12 to 24 months. We're going to discuss the tax implications. There's a lot of chit chat around it potentially being oxymoronic, encouraging and discouraging. And so I'd like to understand both our panelists' perspectives on the tax regime, two types of taxes that have been announced. And then I think because we have somebody from the banking side in the form of Saugata, and then we have somebody from the crypto side in the form of Sarmad. I think we will discuss both sides of the coin in terms of what kind of bankers are thinking, what's on their mind, stuff from their perspective, and then also from Sarmad's perspective in terms of how excited the crypto space is and what he sees happening in the future. So broadly, these are the three themes we're going to be discussing today. I think a great way to start would be if I can maybe go to each of our panelists. I'll start with Saugata. Obviously, as we all know, he's at Axis Bank. He's the chief economist, and he plays other roles within the bank. But I think what will be interesting to kind of understand from him, and then Sarmad, is kind of their current role. They're obviously here for a reason, and kind of what part of their current role aligns with the topic, and kind of what their immediate reaction was when these announcements got made, without going into too much detail, because we will get to that as the questions flow. So if each of you can maybe spend just a minute or so just kind of talking about how your current role overlaps with everything going on right now, and kind of what your immediate reaction was when these new announcements were made.
So thank you, Sahil. Thank you, Sahil. Thank you, FinTech Festival and Constellar, for this opportunity of interacting with all of you. Huge privilege. Thank you. So let me start off with saying that, look, India has already developed a world-beating payments infrastructure system. I mean, the payment systems that we have enabled us to leapfrog into the best of class in terms of payments. And this has already laid the rails for introducing digital currencies in the system. So it's already there. This is the future of money. I have no doubt about that. But there are still gaps in the payment systems, particularly cross-border payments. So many of you would have had this experience using the SWIFT and other systems, 3, 4, 5 days to get, and even at the end of this, you don't really know whether the settlement has actually been done. You don't get a receipt, etc. Nowadays, with various wholesale and retail platforms like Ripple, TransferWise, Krill, etc. These transfers can take place in a matter of hours, if not minutes. So that's the change that has come about with these digital currencies. One final thing before I end. So this brings us to this tech underlying all these cryptocurrencies, digital currencies, etc., which is the distributed ledger and blockchain. Now, this is a very powerful tool. I mean, this is a very major advance with multiple applications. Example in cross-border payments. I mean, the thing that we were talking about. I mean, these are the founding blocks of many of these new applications that we are seeing, and these have been as enthusiastically incorporated, applied now as AI and ML. So this potentially presents a very promising new technology.
Okay, Sarmad, over to you.
Sure. Thank you, Sahil. I'm glad to be here and thank you for having me. First reaction, I think we see this as a positive, right? Because there were two investments that came around the same time, right? One was the CBDC announcement, right? And then there was also the virtual digital asset classification that came out in the budget, right? And we think this is a very good move where a clear demarcation is being done between the legal tender use cases and the asset class use cases, right? Of cryptos or private currencies, whatever you want to call them. There are a lot of names around for that, right? So we think that addresses basically the monetary system stability concerns that most people have had. And this is what the industry has been pushing for a long time, right? So we are really happy to have that. Even from a tax perspective, right, it was glad to have the finance minister recognize the growing scale of the industry, right? And a specific tax regime definitely helps. It gives clarity to a lot of people in the ecosystem, right? And in the long term, it's good. I know there are some nuances around rate of taxes and other attributes, right, that need addressing, but I'm sure those will get addressed through the consultative process that the government has, right? So generally bullish, and we are very excited about crypto and blockchain.
So thank you, Sarmad. I use the word oxymoronic at the start to basically, because a lot of the research I did and a lot of the listening of the announcement and the noise that was created around the announcement kind of also gave me the impression that there's mixed signals, right? On one end, there are all these announcements about how we're going to open up, and we're going to be open-minded, and we're going to announce these new currencies, and we're going to promote other virtual assets. But on the other end, there were some pretty clear tax regimes that were announced in the form of the flat tax and in form of the 1% TDS. So before we go deeper into the understanding the tax regime, because I think that's important for our audience, are you also of the belief that this is kind of encouraging on one side and discouraging on the other side, and kind of people, would you understand why some people are confused in terms of what stance the government is really taking, or would you say it's pretty clear?
I think it's not so much contradiction in one way or the other, right? So if you understand, right, I think CBDCs and virtual digital VDAs, right, virtual digital assets, have very different objectives and use cases, right? Let's look at a CBDC first, right? In very simple example, right, you could think of CBDC being a digitization of the banknote that you carry with you today, right? So what has happened, right? India has made a lot of progress in digital payments, right? And this is a continuation of that, right? Today, even though you do a UPI or a Paytm, for example, right, but there is still underlying physical cash in the system, right, that represents that transaction, right? What CBDC does is it takes that physical cash out of the equation, right, and becomes part of the overall currency in circulation, right? So it has a very different purpose, right? And one key benefit that comes out of it for them, right, is basically it reduces the cost of management, right? Today, I think there are some estimates where 15 to 17% on a 100 rupee note, right, the value is spent over a 4-year life cycle, right? So it has one place, right, in this whole thing, a different objective, right? And then when you look at virtual digital assets or private cryptocurrencies, right, those are more to work as incentive mechanism for decentralized blockchains, right, which have different applications, right? So I don't think one replaces the other. There are these concerns around taxation, right? But if you really look at evolution of any industry, right, think of e-commerce back in 2012, right? Anything that comes up new, there is generally no clarity, first of all, right? So there is some uncertainty there. And then slowly the government and regulators start building that clarity. The current steps that you see on taxation, right, do address some concerns, right? And is a first step towards And I think there's a lot of consultation that the government is also doing. They're also trying to learn more things about what impact these could have. And I believe on the long run, right, hopefully they will address these concerns and make it at par with other asset classes.
Go ahead, sorry, go ahead.
Right. So in the short term, it might feel like a lot of confusion and contradiction, but if you take the benefit of history, right, I think it's going to settle over a period of time.
I want to take one more minute of your time on this topic before we go back to Saugata on the tax piece, right? Because I guess a lot of people haven't fully understood the tax regime, right? So if you can maybe spend a minute or two just kind of explaining the 30% slab and kind of what that applies to, because I know there's some rules in terms of offsetting losses and what cannot be used and what can. So just a bit of a crash course on that. And then on the 1% piece, right, on the TDS, just for our audience's knowledge.
Definitely. So see, this is not a thumb rule, right? So for all the listeners, right, they should definitely consult their tax experts, right? Because this could have different consequences under different matters, and there are still details being thrashed out. But essentially what they've done in the budget, right? One, they've introduced a different class of assets called virtual digital assets, and then prescribed a specific tax regime for that. They propose to tax it on a flat 30% on profit, right? Which is to say, if, for example, you bought a Bitcoin for 1 lakh rupees, sold it for 2 lakh, you now have a profit of 1 lakh rupees, right? On this 1 lakh, you need to pay 30% of taxes, which is about 30,000 rupees, right? What benefits it gives you? Any cost of acquisition, right? So when you were buying this Bitcoin, for example, you paid brokerage. I think that's allowed to be deducted as cost of acquisition when you calculate this profit, right? A few things that it doesn't propose to be allowed is, for example, carry forward, right? What happens if you have a loss in one financial year? There are some asset classes or income tax carry forward provisions which allow you to carry forward this loss to a next financial year so that it can be offset, right? Those have been excluded. And there are also exclusions around expenses, right? So for example, assume you have a trading business which trades in cryptocurrencies or VDS, right? You would have some people who work within that sphere or office expenses, right? Those kind of deductions are not allowed today, right? And a few aspects which probably will get clarified across the period is, there is today a basic minimum deduction of 2.5 lakh rupees, right? So if your income is lower than that, you don't need to pay tax and you don't need to file returns, right? On the face of it, it's not very clear whether that exemption on filing of returns applies to this provision or not, but hopefully it will get sorted, right? That's more on the tax piece of it. The other piece on TDS, there is also a provision which basically poses a responsibility on whoever is the buyer, right? So basically anyone who is paying the consideration, they are required to deduct 1% TDS from the buyer and remit it to the government, right? So in the same example, right, if the Bitcoin was sold for 2 lakh rupees, 1% of that, which would roughly be about 2,000 or around, right, will have to be deducted, and they will only pay 1,98,000 to the seller and remit the balance to the government as TDS. Again, I think more procedural details will follow in terms of who is actually responsible, how to pay all of those things. But broadly, this is the broad construct of what they're proposing.
Okay, thank you. I think that was very useful for people who are tuning in. I can see some questions already coming in. So in summary, what I'm hearing from you is that it's a journey, and it's a journey we're moving along, and things will get clearer, right? If I can go to Saugata, before we move to some bank-specific questions from the banker's mind, anything you'd like to kind of say about what we discussed around kind of taxing and taxes of these virtual assets?
No, so Sarmad was very, very comprehensive on this. So I just want to add that I don't think any country allows the use of cryptos as a currency. I think Ecuador does, but other than that, nobody, no other country does. So, but many countries allow the use of cryptos as assets. And of course, cryptos are basically like gold on steroids, right? I mean, so that's the role of a crypto. But obviously, I mean, there are certain characteristics in this which they want to discourage. So it's not treated like equity, risk, capital, etc. So this is a combination of income and some other asset, which Sarmad explained so well. But digital currencies, on the other hand, have very, very strong uses. I mean, reduce transactions costs, increase efficiencies, increase safety, etc. And one other feature of that Sarmad brought about as a feature of it replaces cash. So this is a very powerful replacement of cash. This is programmable cash. You can insert conditionalities into a digital currency, Say, for instance, I mean, trade finance. So that payment will only be made once the delivery of goods are done. So, I mean, it becomes much more functional. The one last final thing, it's already, I mean, we already have a kind of synthetic CBDC, set of CBDCs working in the system. The Libras, the Tethers, which are tied, say, to the US dollar. They are in effect a central bank digital currency because they are tied to the value of the dollar. So they are already quasi CBDCs in action, in operation.
Okay, great. So this is actually a good way to transition to the next question, because all I hear from you is positive about all the new announcements. But we spend a lot of our consulting time talking to bankers and people, and people are concerned, right? I mean, there is a lot of concern around destabilization, about the dependency from banks completely moving away, about risk it can create for the economy, about how deposit, and we've spoken about this briefly, but how if everything moves to the control of the RBI and everybody's storing their currency digitally, how bank deposit books and asset books can shrink, and therefore the ability to lend credit and credit models will get affected. So are you really, I mean, all positive? I mean, is it, what is keeping, not necessarily in Axis Bank, but just generally, what is keeping you awake when it comes to this topic nowadays? I think I lost.
Sorry. So this is a change.
Yes.
We have to be prepared with change.
Yes.
There's no way that you can stop. I mean, this is such a powerful technology that's come. Look, banks are already doing a lot of work with blockchains, with their distributed ledgers and their back offices, etc. Even in front offices, the apps. See, there's a lot of blockchains involved in that, the payments, etc. So banks are already prepared. I mean, so because this is the underlying technology which will. But obviously, I mean, this will have multiple implications for the banking sector. And so the architecture has to be done very, very carefully, and which is what all central banks all over the world in various stages. I mean, the MAS of Singapore, the China's PBOC, the Federal Reserve, other banks are at various stages of preparation.
Right.
So the introduction of a digital currency has to be done in a very phased manner.
Right.
There is the potential that, look, I mean, this is an alternative to cash.
Right.
So first, does a central bank currency pay interest on a digital currency?
Right.
If it does, because there is the potential that central bank currency is the safest form. If you need to place deposits, there's no safer place to place deposits. So there will be a run on banks. People will go out of it. So obviously, in a digital currency, you will not be able to pay interest on a digital currencies. What's the mode of the currency? Retail, wholesale. And there are various pilots that are going on all over the world. I mean, there is a project with 3 banks based out of Singapore, Project Partier, which is doing the retail, which is doing a trial run of a retail platform. There is a Project Dunbar, which is doing a pilot on wholesale currencies. Again, involving the central banks of Australia, Singapore, South Africa, and a couple of other banks. So all of these are trying out these processes. What are they? And then remember, this is replacing cash.
Yes.
One of the key conditions of cash is anonymity.
Right.
Yeah. So you have to replicate the kind of anonymity for this to become acceptable as an alternative form of currency. So what do? Do you have accounts-based retail digital currencies? Do you have tokenized retail currencies? There are multiple trade-offs that need to be balanced in the system. What kind of centralized versus decentralized ledger? Who distributes the digital currency? Is that a central bank distribution or some other intermediary like NPCI, the National Payments Corporation of India? So all of these things will need to be tried out. And it will have to be a very phased process, because as you mentioned, Sahil, I mean, banks can potentially be disintermediated. If banks are disintermediated, they don't have deposits, they will not be able to create credit. The basic function of banks to make loans. So that function goes. Central banks don't make loans, they don't take credit risk.
Yes.
All of these things. So obviously the first thing is a very, very gradual, thought through, phased implementation is the first thing that needs to be done with the digital currency.
So if let's say if we were sitting at the end of 2023 and we all agree that, I don't know if Sarmad agrees, but we would all agree that we don't want banks to get completely disintermediated, right? And we need banks to stay healthy. Plus, obviously, as we can see, all 3 of us are positive about CBDCs and the move to virtual assets. If we're sitting at the end of 2023, if you could explain to, I guess, us and the audience, what is one model or one linkage that you think will work, that will be in the benefit of modernization and the future and CBDCs, but at the same time in equal benefits of the banks and the banks staying healthy and deposit books staying healthy and therefore credit staying healthy? What would that linkage need to be, and what would that model look like? That's for you, Saugata.
No, so again, I mean, obviously, so first part is first try out wholesale, because wholesale is always, rather than the granular part of a retail deposit, wholesale bank to bank, peer to peer, peer bank to CBDCs. So that's always, and that's very useful in part of implementing a more compact payment system. My guess is that for a wholesale, an account-based CBDC would be better rather than a tokenized version, because there's no, you have to have the trail. I mean, you cannot have anonymity for a wholesale. So that's one. So I think these basic things, a couple of basic things, and then of the others, I mean, with and this is a trial as a payment system, more than anything, more than a currency. So I think start with wholesale, start with a account-based system, and then slowly roll it down to more and more granular systems in the process.
Okay, thank you. Let's talk maybe about crypto for the next couple of minutes. So I'm going to move to Sarmad. As people will probably know, CoinSwitch continues to be one of the popular crypto investing platforms. Today, I believe, have recently touched 15 million users. Obviously, any announcement around the promotion of crypto and moving towards it being a valid asset class would be very exciting for anybody at CoinSwitch. So can we, Sarmad, talk for a few minutes about kind of, if you guys had a strategy for the year, how did it change after the announcement? Did it change at all? Were you expecting it? How are you guys going to take advantage of it? I'm assuming number one is, I mean, you'll obviously have a lot more users who now have trust and faith in the fact that the government is recognizing it, so they'd like to invest. So can you just talk a little bit from a technology company and platform perspective, how you guys are looking at the next year or two?
Sure. I think generally there are so many things that keep changing in this space, right? So you're used to the very stark changes every now and then from a regulatory standpoint. So not something new for us. But I think there has been an expectation of regulation over a period of time, right? Although because government has announced it a few times before they've shown their intent. But I think it does take time to thrash out detailed regulations that work out in everybody's best interest, right? So we've been expecting this, and to be honest, I think we're glad about it. We welcome it, because any amount of clarity, right, in the ecosystem adds up, expanding the overall user base, right? So today, for example, you have people who did not very well understand how to pay taxes. Today, they understand that, right? Similarly, what we see as these regulations, some clarity on some of the regulatory aspects come, and further is also expected. You see HNIs and institutions also getting interested, right? Because generally they prefer a whole lot of stability around regulation, right? So we only expect all of this clarity to keep expanding the industry and use cases. And overall, yeah, I think we continue to be bullish.
Okay, great. A little bit maybe, Sarmad, around kind of how kind of you see the crypto space. I know you probably get this asked about this a lot, and a lot of our audience also, I know, has views on this, because I'm seeing some of the questions. But just how you see, maybe not just from a CoinSwitch perspective, but how you see the crypto space evolve in India next couple of years vis-a-vis other countries, and what kind of we're seeing in terms of global examples, and just kind of what your vision for the industry in India is, the way it's going right now.
Sure. So if you just look at, take a step back, right, and look at what we have within the country, right? So we have almost almost a billion people, right? And a big, high penetration of internet, right? Almost 700 million users, right? And we are technologically savvy, right? Digital payment use cases through UPI and other wallets have really done a great job, right? And On top of that, we also have some of the largest developer base in the world, right? So we think we have all the ingredients, right, to adopt crypto at a large scale. That's why you see there has been a decent adoption, a very good adoption in the last 1.5 years, right? Because generally the people that we have are tech savvy, they understand the technology and are willing to bet on it, right? So overall, we feel we can only go up from here, right? And then the other part of it, when you look at asset classes, right? Today, probably between less than 2 to 5% of Indians participate in financial markets, right? Which is very low compared to a 14% in China or 50% in US, right? So as I think these markets mature and users have more information and access to these markets, they will start participating more, right? So that part of market is also unpenetrated right now, right? So generally we feel it's only upward from here. The India story is very strong and India will continue to grow, and so will crypto along with it.
Understood. Okay, thank you. I'm now going to move to a bit of a fun question that I told Amit I'd be asking. But if Saugata had to wake up in the shoes of running this this sexy new age tech platform tomorrow morning in the form of CoinSwitch or whatever it may be, what would his advice be to the other side, and kind of what would he do if he was the CFO, CEO of a tech company tomorrow that was encouraging crypto investment, obviously? And then I'll ask Sarmad the same question in terms of kind of what his stance would be if he was a banker. What would he do differently tomorrow morning onwards? We can start with Saugata.
Great, great. No, so I mean, if I were to wake up in Sarmad's position, I mean, that will definitely be an upgrade in life. I'm going to go in for a Lambo or something. So I mean, and for Sarmad, it'll be a huge downgrade. So that's the first change.
Okay.
Look, I mean, I think both of us will ultimately come around to some form of regulation that Sarmad has already talked about.
Yeah.
You need to introduce to increase trust in these instruments amongst the investor class. I mean, Sarmad has been, I'm probably sure every second of his day he's getting asked this to introduce more certainty into this.
Yes.
So anything, I think any area, any asset class, if it's properly, there's no point in trying to ban cryptos. I mean, it'll simply move offshore, and just like betting in India. I mean, I've been a proponent for a long time to legalize betting and earn revenues out of this. So this is, again, I mean, a more sophisticated form of a speculative asset. So I think it should be regulated, well-regulated class of assets. Within this regulation, I think always any asset class, the way to go is to an exchange. Because it makes it more transparent, the price discovery is better, there's safety, counterparty risks are down, etc. So it has to be an exchange. Again, finally, I think remember that there is a perceived need for a asset like a crypto. Perceptions might differ. I mean, obviously it does differ.
Yeah.
I just want to finish by saying that, remember, it was a remarkable coincidence that the Lehman Brothers failure happened in August, I think, end of August or early September. Within 2 months was the paper by Satoshi Nakamoto on introducing the concept of a Bitcoin. Yeah. So, I mean, obviously, because remember, after the Lehman crisis, I mean, there was this huge inflow of central bank funding. So people were worried about the debasement of currencies, whether the currency would have value or not. So that's essentially where a crypto class of assets is coming in from, other than all the liberal philosophy, etc. So there is a need for that. And how best to tap this need is what we need to think about.
Got it. Sarmad, same question. So the answer, but the main answer I picked up out of that is that you would buy a Lambo tomorrow morning. Obviously everything else is exciting, but Sarmad,
maybe one to me too, because I don't have one.
Sarmad, what about you?
I think so before that, right? Honestly, there's a lot more to crypto and there are a lot of use cases, right? It's not really the same as betting, right? Although people push that misnomer, right, in terms of speculation and all, but there is a lot more to it, from what it started from Bitcoin to what Ethereum or Polygon is doing. So I'll happily chat offline with you on that one. I think generally banks, right, not much, we work very closely with them, but I would say embrace change with slightly more enthusiasm and be welcoming for it. Change is always not bad. It's good also. So that's all.
Okay. Thank you. I think that this was very, before I move to audience questions, I want to say this is very exciting. I was actually part of a panel a few months ago in Europe, where the topic was, is banking moving out of banks? And I feel like the way they labeled the whole panel discussion and the whole 1 hour was just so negative in terms of the relationship, that by virtue of just the topic being like that, everything was just falling apart in the conversation. But I think, but I think what I enjoyed about this conversation is that we're actually all talking the same language, right? Using different words. There seems to be this singular vision. But obviously, everybody needs to guard their own risks and their own business models. But I think the collaborative aspect, even our audience, I hope would agree, is definitely coming out, and we hope that gets better. So with that, I think I'm going to close out on our conversation. We have, I think, 3 or 2 audience questions that I'm going to take now. I'll go in order of when I receive them. The first question is by Mr. Ajinkya Birodkar, and the question is as follows. If a regulated cryptocurrency is launched and existing cryptocurrencies are regulated, will circuit breakers and other limitations imposed on equity trading be introduced for cryptocurrencies as well? If yes, will this reduce the investment potential? Maybe I'll give that one to Sarmad to react to. Yeah.
Honestly, I don't think I have the answer for it, right? Because see, there are 2 things unlike equities, right, which are very domiciled in a market, right? So for example, what happens, cryptos or blockchains also have a global aspect to it, right? So when price moves, it's a function of demand, right? So although you may want to geographically, locally have circuit breakers, it may not be possible in the global context, right? But I think as people start collaborating across the world, right, which is what the PM has emphasized a few times, right? Yes. Maybe such a framework will come at some point in time.
Understood. Okay, Saugata, would you like to share anything on that, or should I?
No, just the fact that obviously, I mean, if it's trading on an exchange, remember again, I mean, that the first set of cryptos versus the stable coins. I mean, precisely because the supply of cryptos was by design limited, there was huge volatility because of the changes in demand. Yes. That's what brought about the concept of the stable coin. Yes. So obviously, I mean, if this is something like a crypto is getting traded on an exchange, yes. And probably because of that supply limitation, just like in an equity, I mean, you have a limited number of stocks. So yes. Obviously, this will engender volatility in the system. And for that, an institutional mechanism has to be put in place, whether it be circuit breakers or whether it be other systems. Is
okay. Thank you. I'm now going to move to our second question by Manish Thakwani. And the question is as follows. What are your views on recent incidents of frauds in the crypto/NFT space? Even RBI's major worry about launching a digital rupee is the risk of cybercrime and frauds. What controls do you think are important? Yeah, so I guess this is a global, I mean, this is not India specific, but I mean, this is just the risk of having something new and something that is controlled on a technology like this, right? So I'd be keen to hear from both of you. Again, let's maybe start with Sarmad. In terms of just risk mitigation and cybercrime and kind of, I mean, even in the NFT space, we didn't talk about NFTs today, but we know that people are basically hiring graphic designers and making the same thing and selling it to somebody saying they own it, and then the money is gone the next day, right? So what, Sarmad, is your kind of view on this question?
See, if you look at blockchain technology overall, right, it tries to address some of the cyber risks or hacking risks, right? Because the technology now goes from one source to a more distributed nodes, right? Which is right. Because it works on a consensus model, it's like difficult to hack, rather than it might be easier to go and hack a bank today, which has happened, right? But when you do it over a blockchain, that generally makes it difficult. There are always both positive aspects or negative of something, and every now and then you'll see some of these cases, but I don't think they're that prevalent, right? And overall, as the industry evolves, these things will also get addressed.
Okay. Saugata?
So again, I mean, look at the distinction between the asset and the currency. By design, a blockchain-based currency is designed to be safer and more fraud-resistant because of the inherent, the thing that we were talking about, the programmability built into it. By design, it's supposed to be more traceable. It's supposed to be, I mean, there are conditions attached. So unlike that Bangladesh central bank money being transferred out into the Philippines or something, That will probably not have happened if that transaction had been done through a digital currency. I mean, blockchain-based currency.
Yes.
Assets, on the other hand, is problematic, and this is not just. I mean, you have IPOs, you have that whole .com bust and things. So I mean, anything which is new, something, a business model or something which you do not understand, that's potentially liable to a loss of value. Whether it be loss of value in inherent value or through a fraud or whatever, that's something that, and that's why, again, I mean, we're talking about regulation and going through an exchange, because exchange has very stiff KYC norms, AML norms, etc. So I mean, I think it's much safer to go through an exchange rather than OTC type deals with all of this.
Understood. Okay, well, those are the two questions I had from the audience. Thank you both for your time today. Again, I think to summarize, I think we're all equally excited in terms of kind of the future. We're all on the same page. We're talking different languages, but we have the same goal in mind. And it was thank you for being open and having an open, enthusiastic conversation with with me and FinTech Festival today. Thank you, guys.
Thank you.
Thank you, Amit.
Sahil, and thanks to Saugata and Sarmad as well for giving us your time from your busy schedules to come and join us for this conversation. And for our audience now, with that, it is time for us to move on to our next innovation talk, which is on the emotive design in FinTech. And stay with us and we'll be right back.
Thank you.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू।
हाँ कर सकते हैं।
नहीं कर सकते।
लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Welcome to Fego, a pioneer in the world of intelligent open finance. With our full-stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.